How is this one looking to you on the charts? Do you think that that 67% up move that the stock has registered in the last 6 months will take a pause now, or do you see it actually climbing more higher?
NCC has shown a very smart rise on the upside, and we can clearly see the stock is still not showing any kind of a divergence or momentum breakdown. So the upward trend is still intact. I think it's an opportunity after some consolidation we saw over past few days again to enter into this stock. And the target on the upside is at 180, and on downside one can maintain a stop loss of 147.
Alright, so that is NCC for you, and Ashish's stake coming in on NCC. But let's talk about a stock that is actually buzzing in trade on back of his earnings, and that has got to be Trent, because Trent actually came out with his earnings, and along with his earnings you had a slew of brokerages that came out with their note also on this particular counter. Firstly, let's talk about Nuvama. They've actually upgraded the target for Trent to about 2,119 rupees per share, as against 2,037 rupees per share that they have penciled in earlier. They are saying that Trent remains their top pick, and also they are saying a stupendous growth is sustaining for Trent, and the benefit of franchise expansion is pretty much visible. While Morgan Stanley has also said that Trent has beaten earnings estimate actually on all counts. They are saying they are maintaining their equal weight stance on the counter. But if you look at the target also, they have also raised it to 1624 rupees per share versus 1475 rupees per share. Not just that, Morgan Stanley has raised their FY24-26 estimates also by 3 to 6%. They are saying the improving trends is visible in the grocery JV. Also, they are saying the subsidiary Booker India's contribution was positive, this after 13 quarters of loss. So on back of this earnings, strong earnings and thumbs up coming in from brokerages, you can see Trent scaling higher, 6% up move on that stock today.
Absolutely, surely keeping an eye out on Trent. Let's move on and talk about another earnings candidate that's buzzing in trade as well, and that is Varrock Engineering. And Ankita, how are the numbers looking like for Varrock Engineering? The street is surely giving it a thumbs up.
That's correct, Winnie. The street has given it a thumbs up on the back of some good set of numbers that came in for Varrock. So it in fact climbed in 17% after the company reported a 37% sequential rise in profits. The profits have come in at 55 crores against a profit of 40 crores in the March quarter, and a loss of 3.9 crores a year ago in the same quarter. So Varrock's sales for the quarter also grew at a 10% on a year-on-year basis and came in at 1,805 crores, which was ahead of the industry as the supply to the EV players gathered pace in this particular quarter. Now the EBITDA margin also improved by 180 basis points to 10% from 8.2% on a year-on-year basis, and they were primarily driven by the business mix, incentives and the operating leverage for the company. And on the back of that, we are seeing a lot of uptick coming in for the particular stock.
Alright, that's Varrock Engineering for you. But Ashish, let's talk about Asian Paints. And how is Asian Paints looking to you on the charts? Because this particular counter has gotten everyone complaining that this one is just not moving, and you can see that. Actually, in the fag end of the last 6 months is when the stock actually started seeing some sort of a recovery. Where do you see Asian Paints headed from here on? Because in the last 1 month also the stock has actually seen some sort of declines.
Asian Paints, even in today's session, the stock has failed to show any kind of a strong move on the upside. Rather, it is falling today, and we can clearly see it has even broken the support of 3,300. So over short term, I am not too optimistic about this stock. There is a possibility we can see the lower levels of around 3,150, and on the upside it has to cross about 3,350, which is the 10 days average. As long as it does not cross back about that 3,350 level, I think any pullback can be used as a shorting opportunity for the short term target of around 3,150.
Okay, let's keep an eye out on Asian Paints, but let's move on, talk about Cloaks. This one is also in focus on the back of its numbers. When you look at it, the revenue saw an uptick of around 11%, but the profits of the company, that saw a growth of 7%, and margins also saw a good expansion of around 100 basis points. 24.4% is what the EBITDA margin came in at versus 23.2%. So yes, keeping an eye out on the numbers. Even the EBITDA has seen a growth of around 16% as well. Overall, as of now, you're seeing the stock is not doing anything exciting, but recovered from the day's absolute lowest point, but down almost 1.5% as of now.
Alright, that is Cloaks for you. But Lisa, Dream Folks, why is this one in the spotlight today?
since the last 2 days. It has tanked around 30% on the back of very, very disappointing set of numbers. The revenue that was up around 12% stood at 266 crore. Revenue was driven by a number of the touch points that was added, the increase in the air traffic and also the increased number of cards in circulation. But the EBITDA that was down 47% and stood at 18 crore. Even the margin that sharply it contracted to 7% from versus 14% which was seen last year. And it was highlighted in the investor presentation that EBITDA that was impacted by the abnormal increase. It was a one-time increase in the common area maintenance charges, which led to an increase in the launch cost. Also, the EBITDA decline was on the back of higher ESOP charges, and they mentioned that the time lag between the contract renewals on both the supply as well as the demand side, that also impacted the margin. So, well, we can see Dreamfolks is down 13% today, and it has actually, the weak earnings has cut short the dream run it had, because on a YTD basis, the stock was up around 50%.
Absolutely. Let's move on and Ashish talk about M&M then. And on the charts, Mahindra, what is the indication that you're picking up in terms of the charts over here? Last 1 month, not doing anything exciting, but do you see a pickup now coming in for M&M?
Yes, it looks like, because see, the entire auto space is outperforming, and I think it's going to be the leader over coming few months as well. And M&M, after a brief consolidation, is showing again an attempt, a good bounce back from the pivot low of around 1440. So I think the stock is stock can manage to break above the previous high of 1600 and move towards 1650 levels also. So the target for M&M is at 1650, and on the downside, the support for the stock comes around 1490.
All right, moving on then, let's talk about Max Financial, and this one was on fire. Remember, it came out with its earnings, but apart from the earnings, what happened also is the fact that Axis Bank will be hiking stake in Max Financial, putting in a substantial amount of approximately 1600 crore rupees. Apart from that, your Jefferies also that's come out with a note on Max Financial, post those numbers and post this particular development. They're saying that the VNB has grown by about 16%, which was higher than the estimates. They're saying the growth was led by retail and non-par segments. Also noting about this Axis transaction, they're saying Axis Bank to infuse about 1600 crore rupees to raise stake to about 19% from 13%, and this implied the valuation of about 26,000 crore rupees. That's tad below the implied market cap valuation, but nevertheless, good numbers, beating estimates on back of this Axis Bank news. You can see the stock has seen an uptick of approximately 10% in today's trading session.
Okay, let's move on and talk about the next stock, and that is Schneider Electric. And Ankita, this one is in focus on the back of its numbers as well.
Schneider is in focus on the back of its numbers. It is up 3% in trade today, and it has posted a 32% rise in its net profit, which has come in at 34 crores versus 26 crores on a year-on-year basis. And this is primarily on the back of higher revenues that the company clocked in. Now, the total income of the company rose to 497 crores versus 371 crores from a year ago. And also, the board of directors in their meeting have also approved the appointment of Suparna Banerjee Bhattacharya as the new chief financial officer. And on the back of that, this company is buzzing in trade today.
Keeping it with more earnings then, and we have Granules that reported its numbers as well. When you look at the numbers that have actually been come from the company, we're seeing a 3% downtick coming in terms of the revenues of the company. Profits of the company also a sharp decline of 62.5%. Net profit came in at 48 crore this quarter versus 128 crore last year, the same quarter. EBITDA margins, a sharp contraction over there as well, 13.9% versus around 20.7% is what the EBITDA margins were at. A 600 basis point, more than 600 basis point terms in contraction in terms of the margins as well. Clear pressure coming in on the operating performance of the company. Nothing exciting there, and that's why the stock is also doing nothing exciting, down 5.65% as of now, trading at the day's lowest point.
All right, moving on, Ashish, let's talk about HUL, and how is this one looking on the charts to you? Do you think the HUL will emerge to be a winner after this fall that it has seen in the last 1.5 months, or rather 6 months, a fall of about 1.6%?
Not really, because if you check, HUL has been finding very tough to cross about that 2,700, and every time it goes above that area, there is selling pressure that is being witnessed, and it moves towards the lower end of the range, which is around 2,440. So HUL is not looking good on the chart. Even today it is breaking down. And I think the stock can move towards around 2,480 levels on the downside. And on the upside, 2580 is going to be a major hurdle for the stock. So any pullback can be used as a shorting opportunity over near term for 2480 as the target.
Okay, keeping an eye out on those levels for HUL. But moving on to Hinduja Global, and Lisa, how are the numbers looking like for Hinduja Global? Stock is now down almost 2.6%. Were the numbers not very exciting?
Yeah, not so great numbers reported by Hinduja Global. If we look at the revenue, it was flat on year-on-year basis. The profit, that was down 50% and stood at 17 crore. Even the sequential numbers also not looking great. It was 35% down, the net profit that was reported. Talking about their segment, they said that the BPM business that achieved a revenue growth of around 7% on sequential basis, and the margin saw improvement in that set of business. But the newly acquired business, that is TechLink, the data and analytics business which they acquired in Q4 FY23, even that posted a strong performance, and it delivered revenue of around $8.8 million with EBITDA margin of around 22.2%. The management said that they are confident of navigating through the challenges and seizing new opportunities, but considering the uncertainties in the global economic scenario, they are a bit cautiously optimistic for the year. So on the back of weak numbers as well as weak outlook, the stock is trending downwards in today's session.
All right, moving on, let's talk about Bharat Forge then. Bharat Forge came out with his numbers yesterday, but you have a lot of brokerages that have come out with their recommendations and their note on this particular counter. Remember, there is one note coming from CLSA where they've actually downgraded the stock. But if you look at Morgan Stanley giving a thumbs up to Bharat Forge, maintaining an overweight stance, target of 1,028 rupees per share. They're saying there's strong core business, defense opportunity and subsidiary turnaround that's going to be driving the growth going ahead. Whereas you have JP Morgan, which has upgraded the stock to an overweight with a target of 1,115 rupees per share. They are saying the accelerating turnaround and diversification is what's aiding the company. They're saying that they're better than expected traction in defense and industrial revenue. Also, revenue diversification away from the CVs should reduce the cyclicality for this particular counter. So Bharat Forge on that particular development is moving in trade today. Now it's given up all of its morning gains, now down 1%.
Okay, that is Bharat Forge for y'all. But Ashish, on the charts, you picked out Motilal Oswal for us. Last 6 months you've seen almost a 30% return coming in. What is the view now on the chart? Should one actually book out the profits, or do you expect the run-up to continue?
See, the overall trend for the stock continues to be in the form of higher low, which indicates that the trend is on the upside. So one can maintain a buy stand over here, even if the stock has run up. We are seeing it happening with the consolidation every now and then, and that shows a good accumulation at every level. So I am optimistic about this stock reaching the levels of around 950 over short term. And on the downside, the 840 level is going to act as an important support.
On, let's talk about Ratnam and Lisa. Why is this one in focus today?
It reported their numbers, and a good set of numbers came in from Ratnamani. The revenue was up 20.3% on year-on-year basis at 1,175 crore. Even the EBITDA margin, that also expanded to at 114 bits and stood at 17.6% versus 13.5% which was seen last year. And even the PAT figure, that was also higher. It grew at 55% and stood at 135 crore versus 87 crore seen last year. The company updated that they recently brought a 53% stake in Ravi Techno Forge for around 98 crore, and they are looking to increase the stake in that company 27% over FY25. And even the company's order book, even that has seen a substantial expansion. They reached a order book of around 3,100 crore, and major portion was dedicated to the domestic carbon steel pipes. So that's on Ratnamani. It's up about 0.1%, and it's about 1.5%, and it's trading higher in today's trade. It was up early morning in trade, but since then it has cooled off its gains.
Okay, that is Ratnamani Metals for y'all. Let's move on and talk about Suzlon then. And Ankita, why is Suzlon in focus today? Why is it buzzing in trade?
That's right, Vinny. In fact, Suzlon is locked in upper circuit right now. It is up more than 4.5%, 4.8% to be precise, and it is locked in upper circuit as I mentioned. It is because on the back of the fact that it has launched a QIP or qualified institutional placement with a plan to raise up to 2,000 crore rupees, and the pricing is likely to be in 17.5 to 18.5 rupees per share range. The demand from FII and DIIs both looks very good, and the funds will be used to repay the debt and meet the working capital requirements for the company. And on the back of that, Suzlon is up 4.8% and is currently locked in the upper circuit.
All right, moving on then, HDFC AMC. Ashish, how are the charts looking for this one? What are the prospects looking for this particular company? 6 months have been good, but you think the remaining 6 months will be better?
Yes, looks like, because HDFC AMC formed a very classic rounding bottom kind of a pattern, has given a strong breakout from the neckline around 2,300 and sustaining at the higher level. So the pattern target itself on the upside, if you check, comes to around 2,800. That's a very steep target, but that's what the stock can move towards, 2,800 on the upside. And on the downside, the stock can find support near the levels of around 2,450. So it's a buy on HDFC AMC, and I think the run-up is yet to continue on the upside.
Keeping an eye out for HDFC AMC and the levels there. But let's move on, talk about JB Chemicals. And Ankita, why is this one in focus today? What's the news for?
Well, Vinny, it is on the back of its quarter numbers that it posted. Now it has posted a robust quarter one results, and the revenue has grown at 14% at 89 crores, and the PAT of the company has also been strong. It has seen strong growth of 35%, which has come in at 142 crores, and the EBITDA has also improved 28% to 243 crores on a year-on-year basis. And on the back of that, JB Chemicals is in focus today.
All right, moving on then, Ashish, Adani Ports. So where is this one headed from here on? Because yes, a stellar recovery is what all Adani Group counters have actually staged, and Adani Ports is no less. 37% uptick in the last 6 months. How are the prospects looking for this one?
Yes, indeed. All the Adani Group stocks have managed to outperform, and we can see that Adani Port also managed to break that 780 mark and is now moving around 806 levels. The overall trend for the stock is bullish. It's best to be moving in the direction of the trend. The target on the upside, the previous price action resistance that comes to around 850 levels. So I think the stock can move towards 850 even from here. And on the downside, the support for the stock is at around 780 levels.
On to the next one, and stock number 34 for today is Dishman Carbogen, Lisa. And why is this one in focus today? Is it also in focus on the back of its numbers?
This time, Vinny, it's on the back of numbers. So Dishman Carbogen, they posted okay set of numbers. The revenue was up 33%, stood at 72 crore. Margin that was steady at 16.7% versus 16.3% seen last year. The investor presentation is just out, and they highlighted that the net revenue was up due to increase in the CRAMS revenue from Switzerland, and also increase in revenue from the cholesterol as well as vitamin D analogs, and margin that came a bit higher because of the CRAMS business and owing to the higher supplies of the phase 3 as well as the commercial batches. So that's Dishman Carbogen. It's trading flat as we can see with the negative bias.
Dishman Carbogen and a slew of earnings we've seen actually pouring in the last 1 hour. But we have no time on this edition of Market Fatafat to address any of them. Thank you so much, Ashish, as well as Lisa and Ankita for joining us on the show, as well as Swati for joining us on the show and taking us to all the stocks buzzing based on news flows and technicals. And with that, we are totally out of time on this edition of Market Fatafat. Goodbye from Mimi, myself, and the team that put the show together.